Hi everyone and welcome to today's morning report on Friday the 3rd of June with me, Richard Perry, market analyst at Handset Markets. It is non-farm payrolls day and we've got a very important payrolls report, I think, because it is the final non-farm payrolls before the June FOMC meeting, and the Fed is, well, according to their minutes of the last meeting, they're increasingly data dependent, it would appear, and the payrolls report obviously contains incredibly important labour market data and also the average hourly earnings, which I think is increasingly important as well. So market will be paying a lot of attention to this in front of the decision, in front of the announcement. Markets are basically flat on the forex. Euro is dead flat. Sterling dollar basically flat, as is dollar yen. Little bit of positivity through the markets though. Generally, equity markets are fairly strong today. FTSE's up 0.8%, but it's interesting because we've seen the dollar starting just to roll over a little bit, haven't we? We've seen the Treasury yields just sort of having consolidated on the 10-year. The 10-year sort of broken to a 2-week low. The 2-year is also still in that consolidation mode, and I think that this is the market being a little bit nervous about the payrolls report and what it could do to the dollar. But the improvement in sentiment has come as the oil prices turned around. You had that meeting from OPEC yesterday. Again, no agreement, no real surprise there. But as the afternoon wore on, you also had the announcement of another drawdown actually in the EIA oil inventories. So that helped to support the oil price, and it's sort of maintained that support today. So that's helped again to support equities, and we had positive moves, marginal gains, I think it would say, on Wall Street, and then you saw that reflected in the Asian session as well. So that's sort of filtered through into European trading. But I don't imagine you're going to get too much further moves on these markets, although there is the added sort of volatility of impact of the service sector PMIs, which we've got today, and the European session have their service sector PMIs coming out imminently. So we need to watch out for that. But certainly the UK version, the UK PMI. Sorry, that is the wrong one. Apologise for that. Let me see that one. That's the one. The UK services sector PMI is at 930, and the outlook is to suggest that it's going to be 52.5, which is a slight improvement on 52.3, which was the last month. But then the market will look at the payrolls report. Now we had 164,000 is the expectation today. We had a slightly improved outlook on the ADP employment data yesterday, so that perhaps there could be a slightly improved or slight beat on the payrolls report. Certainly last month's payrolls were very close to the ADP number. But 164,000 is the expectation on payrolls. We've also got the unemployment, which is expected to dip again back to 4.9%. Now, the average hourly earnings, I think, is the important one. That's expected to come in at 0.2% positive for the month, which would be basically continuing the 2.5% year-on-year growth. So that would be sustaining that improvement, which is a good thing. And also the labour force participation rate. Now, the labour force participation rate dipped slightly back to 62.8 last month. So would you see an improvement, if there were to be seen an improvement in the participation rate, that would again be positive for the sort of the expectations of a rate hike, I think, in the next couple of meetings. We've also got the so much data today, sorry. We've also got the ISM non-manufacturing data, which is expected to come out at 55.5, so a very slight decline on last month, and the factory orders as well, which are expected to come in at plus 1.9% on the month. Phew, what a lot to go on today. So that takes me to my chart today, which is the Canadian dollar. Now, this is more of a sort of a medium-term outlook play in terms of the chart, because we've had this improvement in the dollar CAD in recent weeks as the dollar has strengthened. That dollar strength sort of took a bit of a consolidation from the high that we had at 31.88, and just since then it's just been consolidating a bit. But what we had was a completion of the head and shoulders reversal. But could we be seeing the formation of a larger head and shoulders reversal? Now, if we got a break through this reaction high here, which annoyingly is coming out there at 32.17, if we saw a breakthrough that would complete a larger head and shoulders reversal and continue this recovery. Now, obviously we've got these fib levels, and the fib level 23.6% was initially the resistance So that also is a resistance at 38.2% higher, 33.10. So what we have got is the sort of sequence of higher lows going on now. And if you, as I said, if you sort of break up above 32.17, that would continue this recovery, and it would be continue the dollar recovery. I think generally this could be a bit of a signal chart, possibly for the continuation of the dollar rally. So this could be a very interesting chart to watch. Now you've got the momentum on the RSI, which is now holding nicely above 50. And the MACD line's above positive. Stochastics are sort of following that RSI really. So what we need to see are all these momentum indicators retaining their positive configuration now. RSI above 50. We wouldn't want to see the stochastics rolling over and going back below 50. Which would be a disappointment. But for now, we're seeing this sort of continued consolidation really in the last week or so. Here's the CAD on the hourly chart, and we saw the initial run higher last week, but this week we've basically just gone sideways, and that's as this support around sort of 30 around 30 figure, just above 30 figure, has held. Now that one spot 3012 is around about that neckline. Really interesting that is coming in around about that neckline of the old base pattern. So that neckline is still in play as a key support area. So we're seeing this marginal improvement. You've got the momentum indicators which are slightly configured positively, but you've got the resistance in place at 31.43, which is protecting 31.88. So there's basically a near-term consolidation on this dollar CAD chart, and that is basically what we're seeing on the dollar generally. So it'll be very interesting to see, I think, if dollar CAD does break higher. I think that would be reflective of a broader dollar rally that we would get a little bit of traction on. So I think it's a good chart to watch on the near to medium term. So I wish you good luck in your trading today, and I will speak to you later. Thank you.